And welcome to this Canarc luncheon. The purpose of our trip in Southern California this week is to basically relaunch Canarc with our new business strategy for the year, because I think, as I hope to show you in our presentation, there's tremendous opportunity inherent in a stock that trades at barely 10-12 cents per share and yet has over 1 million ounces in the ground of gold already drilled out and ready for mine development. So Gary is our president and COO. I'm a geologist, by the way. I come out of the exploration world. I'm an exploration geologist by background and training. But for the last 10 years, almost, I've been primarily running a silver mining company called Endeavour Silver. And believe it or not, Canarc is my first company. I was the founder of Canarc, and we did the launch and the listing in 1988. But our business plan was strictly exploration, looking for gold deposits in North America. Canarc has, in the last 20 years, been involved in 2 material gold discoveries, one of which today is our main asset, the new Polaris Gold Mine project. And Endeavour is actually my second company, launched in 2003, when most of these exploration and mining stocks had fallen on hard times. I saw an opportunity to create a silver company. I actually went to my Canarc board and said we should go into silver, and they said no. So I said I'd like to have the right to go and start a silver company because I'm not staying busy in this market in Canarc. And the board said, oh, so you're actually going to go and do this? And I said, well, yeah. And he said, well, then we'll give you the free license to go ahead, but Canarc has to have a stake. And so Canarc was actually one of the 3 seed shareholders in Endeavour Silver in 2003 at 10 cents per share. Now, for those of you who aren't familiar with Endeavour, it is still very much my day job. It's a much larger company than Canarc, with about $1 billion market cap, 160 million in cash, 2 operating mines, and 1,300 employees. From a standing start with 2 guys, an idea, and a 10-cent stock in 2003. Well, guess what? Here we are in 2012. I actually have another 10-cent stock for you. It's called Canarc. And there is obviously a little bit of a gap between both the net asset value of the companies and the stock price. But I'm the founder of both companies. I have a dedicated management team led by Gary. James Moore is our VP of Exploration, Philip Yee, our CFO. We have a great group of people who are builders and operators in Canarc, and we're not building yet, we're not operating yet. And that's what Jim was referring to. Our new business plan for Canarc, to follow the path of Endeavour, means that instead of the traditional exploration-only business model, Canarc's now in a position with its management team to do other things. And so the purpose of today's presentation is to give you not only an overview of the assets of the company, but a vision for where we can go, not only years going forward, but this year, and see where we can, what we can accomplish this year for our stockholders. Canarc is, I think, a very interesting and underappreciated company at the current stock price. And as we get out not only marketing but creating growth for stockholders, then I think you'll see, we hope that you'll see, that Canarc can follow the same path as Endeavour. So that's kind of my introduction. Gary, do you want to say any words, or just at the end? Or?
No, I'm fine.
Yep.
We need to go through the presentation, talk about the assets, and I think you'll see there's a great opportunity here with our new Polaris asset for Canarc to grow significantly over the next 12 months.
So without further ado, Canarc Resource. I'll walk through about a 20-minute presentation while you're enjoying some lunch, and we'll have time at the end for slides. So Canarc Resource Corp, a gold explorer focused on growth. As usual with these companies, we do have to caution you that I will be making some forward-looking statements in today's presentation, and so you're hereby cautioned. In terms of a snapshot of the company's share capital and investor information, I'll just point out that we have a listing on the full TSX, or Toronto Stock Exchange board, as well as an over-the-counter listing in the States. The stock symbol is CRCUF. We're also listed in Frankfurt. There's 94 million shares issued, 108 fully diluted. Most of the dilution are stock options, and most of the options are out of the money. The trading range in the last 12 months has been 9 to 18 cents If you take 15 months, then it's been as high as 28 cents in the last 15 months. And the current market cap is $10 million. So, as with Endeavour, I like to start with management. And even though it's not an exciting part of the story, I think it's a very important part of the story. For my own experience in building a company from scratch, it's all about the people. It always is and it always will be. And so I'd just like to touch briefly on Canarc's people. I'm the founder and chairman and CEO of Canarc. I already introduced Gary Biles. He's our president and COO. I'm the exploration geologist. Gary's actually the professional engineer. He was trained as a metallurgical engineer, but in fact, most of his career has been spent building and operating gold mines around North America, including 7 years with Homestake at the fabulously high-grade Eskay Creek gold mine in British Columbia, which was operated through most of the 1990s. And Gary had hands-on experience in running that mine, as well as several others across northern Canada and into Costa Rica. I actually stole Gary from a junior mining company called Glencairn, and they had hired him to build the Bella Vista gold mine, open pit heap leach in Costa Rica. And Gary's been with us now for 5 years. James Moores is our VP of Exploration. He's actually done an earlier stint with Canarc during the discovery days of the early 90s on our new Polaris gold discovery, and then left us to join Homestake, and he worked for Homestake in exploration before coming back to join us a few years ago. Greg Wilson is our VP of Investor Relations. On the board, I'll just point out that these are all hands-on mine builders and operators, Bruce Bride, Len Harris, and Derek Bullock. Bruce, before his retirement, was the mines superintendent for the underground mines of Homestake in Ontario, in Dakota, and in BC. Len Harris was the first president of Newmont in Peru. He built the largest gold mine in the Western world for Newmont called Yanacocha and took his retirement in the mid-90s. Derek Bullock was the first president of a mid-tier gold producer in Toronto called IAM Gold. He's still a board member of IAM Gold, and even though he took retirement a few years ago, all three of these gentlemen they're doers. I mean, they've been there and they've done what I want to do. So, on to the investor highlights. Canarc, as I mentioned, is very much a gold exploration and mining company. Our focus is on growth through the acquisition and discovery and exploration and development of strategic gold deposits in North America. Our experienced management team, who I've introduced, has found, built, and operated gold and silver mines all over North America, and we do share some common directors with Endeavour. Our core asset is the high-grade 1.15 million ounce New Polaris gold mine project in northwestern BC, which is now ready for feasibility and development. Our growth plan this year, very simply, and as a result of certain events in the last 12 months, we've received a number of very attractive offers to partner our main asset. And so we feel that the first step in our business plan this year is to attract a partner who's willing to spend a significant amount of money developing the New Polaris project. What that does for us is not only advance New Polaris through feasibility to production, it allows us to minimize our shareholder dilution at this time and frees up our management time and money to acquire and explore new gold projects. So there you have it in a nutshell. The vision for this year is basically a rebranding of the company from the previous model of trying to figure out how to raise the money to build the mine ourselves to taking on a partner, using their money to advance New Polaris and freeing up our time to go and do some new and exciting things. And last but not least, what's the opportunity? Very simply, Canarc's enterprise value is currently $9 per ounce in the ground. And if you look at Canaccord's weekly survey of 36 gold resource companies, you'll find that Canarc is the second cheapest of 36 companies who have gold resources. Now, clearly that survey includes much larger companies than Canarc, but the average enterprise value for those 36 companies is $78 per ounce in the ground. So clearly there's some upside potential at the current share price. And as Jim mentioned, this is day one of our marketing trip. And we just want to reawaken investor interest, not only in this special undervalued situation, but in management's track record and our plan for the year. Okay, our project portfolio includes 4 strategic properties. New Polaris I've highlighted, it's the gold mine project ready for development. We also have 2 exciting elephant hunting gold projects in exploration. The TLP gold exploration property is now ready for drilling in the Yukon, and the Windfall Hills gold prospect is ready for drilling in central British Columbia. We also staked 3 new gold properties we call Devil's Thumb in the same general area as Windfall Hills. I will focus mostly on New Polaris for this presentation, but we'll touch on TLP and Windfall because they're really exciting. They're chances, two different opportunities for Canarc to get back into discovery, back into the whole discovery phase of the mining cycle. So, New Polaris, an advanced gold mine project ready for development. In terms of highlights, this is a property we own 100% of, subject to a net profits interest. It was a small, high-grade underground past-producing mine with 231,000 ounces of production history from 1938 to 1951 at a very high grade of 0.35 ounces per ton, 12 grams per ton. We also have a current 43101 resource based on several hundred drill holes of 1.15 million ounces grading 12.3 grams per ton or 0.36 ounces per ton. Had a 6 gram cutoff grade, wide open for expansion. Our view of the geological potential at New Polaris is that this is a classic high-grade underground mesothermal vein system. What does that mumbo-jumbo mean? If you look elsewhere in Canada for similar systems, you'll find them in Ontario and Quebec. One example I use is the Red Lake district of Ontario, which is the home to a fabulous high-grade producing mine and numerous juniors making new discoveries. The geology of the Red Lake camp is remarkably similar to the geology of the New Polaris property. Therefore, we feel that the potential isn't 1 million ounces. We've drilled this thing down 500 meters, 1,600 feet, but it's still wide open. All of the drill holes that we've drilled below 1,600 feet are still intercepting high-grade mineralization in the same mineralized zone, and it's wide open at depth. So we think that the geological potential is not 1 million ounces, it's a multiple of 1 million ounces. And last but not least, this project is now ready for development, and we've done the economic analysis at $1,400 gold. Building a 72,000 ounce per year mine with a minimum 10-year mine life will generate over $250 million of after-tax cash flow with an NPV of almost $200 million, an internal rate of return of 43%, and a payback period of less than 2 years. So on paper, this project is extremely robust at prices significantly lower than today's spot price. Okay, a quick tour of the asset. Polaris is located in the northwestern corner of BC, kitty corner to the panhandle of Alaska, and actually not far from Juneau. Here we are just across the border from Alaska, and only about 40 miles as the crow flies from Juneau, the capital of Alaska. In fact, you can find us just up the Taku Inlet, hanging right up the Taku River, and there we are. Our property is located on the western margin or western shore of the Tulsukwa River. And what's interesting about this story, and there'll be more details coming, is that there's actually a larger mine development project that's 2 years ahead of us in permitting, financing, and development. And they are going to construction this year right there. The project is called the Tulsukwa Chief Mine, and the company that owns it is called Chieftain Metals. And we share a common property boundary with Chieftain Metals. Our mine is here, and their mine is here. So the fact that we have a bigger neighbor already through permitting and already through the bulk of their financing, already through feasibility, and they've already announced their intention to start construction this year, is very good news for Canarc shareholders. So again, a quick overview. I've touched on the location in northern BC, the fact that we have a number of claims totaling over 1,200 hectares, that's 2,500 acres. And crown granites in BC are the same as patented land here in the States, so that you want crown granites. They're good. You're the actual owner of the land instead of being just a renter of the land. Access historically was by small aircraft to a 1,500-foot airstrip, which we still have, and by barge, because we're at the tail end of the tidewater. We get tides coming up the Taku River all the way to the camp. And historically the mine, when it operated, it would operate 12 months a year, and it would typically have a 4 to 5 month summer barge season where they would bring in all of their food and fuel and supplies and equipment and all of that, and they would barge out all of their stockpiled gold concentrates. And that's how the mine operated from 1938 to 1951, barging the concentrates down the coast of BC to a smelter in Tacoma, Washington. And the reason why the mine shut down in 1951 was partly they were facing quickly rising labor costs in the post-war years. There was a real demand on labor. And partly because the first barge load of gold concentrates containing 1,728 ounces of gold sank in a storm off the coast of BC in March of 1951. And the management and board of the company at that time elected to collect the insurance, close the mine because of the higher costs, and rent the facilities out to the then owner of the Squachief mine across the river. That owner was at that time Cominco, now Teck Cominco. And from 52 to 57, Cominco rented the mill, rented the town site, and processed their ores from across the river through our mill. So that's kind of the history of this project. In fact, there was a full-scale town site with a watchman all the way up until 1971, when the watchman died, and then slowly but surely freeloaders came along and started helping themselves to various parts of the historic town. So that today there's not much left to see other than our own operating facilities on site. Since 1990, Canarc has invested over $29 million, including a 30-man winterized camp, surface and underground equipment, and a 500-meter airstrip. By the way, one of the pieces of underground equipment was actually left over from 1950. It was an old-fashioned white grader, complete with a full set of spare parts, and we still use it to clear the airstrip. We haven't contacted White yet to see if they're interested, and maybe we could sell it to them for a museum piece, but it's a piece of working equipment. We love it. The database that defines the 1.1 million ounces includes more than 1,000 drill holes and 31,000 samples. So this is not a guess. This is a very robust and well-known mineralized zone. I've touched on the neighboring property, Squachief, and the neighboring company, Chieftain Metals. Already permitted, currently being financed, announcing construction already for this year and production next year. They have their own 4,500-foot airstrip, and they have the right to build a road to connect with the existing road network in British Columbia. That's very, very important from their point of view, also from our point of view, because what we've modeled, that economic model that I gave you earlier, it's assuming that we do what the old timers did and operate the mine 12 months a year, but only ship by barge 5 months a year. Well, obviously there's significant cost to carrying the operation for 7 months with no cash flow, because what you're doing is stockpiling the gold concentrates and then selling them all in the summer. So if our neighbor builds a road, this is a significant breakthrough for our company. It's part of the reason why we've changed the business plan to get going this year. And last but not least, Canarc has recently received several strong expressions of interest from potential partners to option and joint venture New Polaris to feasibility and production. I'm just reiterating the point that when you have a 10-cent stock or a 20-cent stock, it's pretty tough to raise the money to build a mine. But if you have a partner with deep, deep pockets, it becomes a lot easier, and it frees up management's time and money to go and do other things, like follow Endeavour into production elsewhere. So there's just a snapshot giving you a feel for the terrain. The mine is at about 40 feet above sea level, so thankfully it's at the bottom of the mountain, not the top of the mountain. And you can see that the airstrip can handle good-sized aircraft. In terms of a 3D model, the old mine is located up here on the hillside. All the old underground levels shown in the different colors. And then these yellow blobs are the stopes that were mined out by the old timers. All we did was come in here in 1990 and start drilling below the lowest mine level. And yes, absolutely, what we found is a simple sheet-like extension of the old ore body. And that sheet-like extension shown here is the million ounces, 1.15 million ounces. It is wide open at depth and to a certain extent laterally. There are significant opportunities back up in the old mine to go back and try and mine what was considered to be low grade in the old days is high grade nowadays, but we haven't spent much time or money yet, and we won't until the mine's in production. And then I'll go back and see what else we can get out. If you view that deposit, that sheet-like vein system in longitudinal section or profile view. Here we're looking on at the face of the vein. Here's some of the stopes that were mined out by the old mine. There's the lowest mine level. And then every dot is a drill hole intersecting the high-grade vein structure. The dots are color-coded. Red, orange, and yellow all make ore grade at current prices. And blue is marginal economics at current prices. You can see that the vast majority of the holes make ore. And even at depth, we're still hitting high grade. And it's wide open at depth. If you look at it in cross-section, the point I want you to take away from this is that, again, it's a simple sheet-like vein structure that should be relatively easy to mine. And the individual drill intercepts can be quite high grade. Over here we have 22 grams over almost 3 meters, 23 grams over almost 4 meters. That's this area down in here. And if you actually focus on this area right here, 9 grams over 35 meters. Wow. If we actually drilled that hole today, the stock would be $1. I mean, because it's old drilling, the market doesn't care. Well, we care, and so we feel that it's time well overdue for drill intercepts like this to get some market recognition. And I think that the potential for the project and therefore the stock is significantly more than the current market cap.
You drill all these holes yourself?
Only 291 of them, which is a lot.
Yeah.
This scale comparison is actually hard to see, but that longitudinal section, let's just go back. So that longitudinal section there, showing the bulk of the 1,000,000 ounces, shows up on this slide there. And because I drew a geological comparison to the Red Lake mine in Ontario, I just wanted to give you a scale comparison. At Red Lake, they're now mining a mile deep, and the highest grades are at the bottom of the mine, and they're still going strong. They're now talking about mining down to 8,000 feet at Red Lake. The deepest level of mining at Polaris, 550 feet. The deepest single drill hole, 2,200 feet. And most of the deeper drill holes aren't even in the resource. And so this is why our geologists have the optimism that there's a multiple of 1,000,000 ounces here. This thing is wide open at depth. Our development plan for Polaris as we move forward now is to bring in a partner to build a 72,000 ounce per year high-grade underground gold mine. The development schedule would be 3 years approximately and cost $30 million to get through mine development, establishing reserves, infill drilling the resources, bulk sample for final metallurgical testing, mine and plant engineering, environmental studies, government permits, and a feasibility study. That's what $30 million gets you. So that after you make a production decision, the only thing left to do is raise $70 million of project debt to build out the plant, the power station, the camp, and related surface facilities, and then you've got a going concern. Operating costs in this economic model are less than $500 per ounce, and even with the high-cost location, the grades more than offset that, so that the operating costs on a per ounce basis are in the lowest quartile of the business. Here's just the preliminary economic assessment at $1,400 gold in detail. Okay, so that's what I wanted to tell you about New Polaris. This was a project that was our first discovery, actually. In 1990 we discovered this thing. We drilled it out and we're actually going to feasibility in 1997 when the gold market took a tank, went in the tank, and the Bre-X scandal, those of you who remember Bre-X at the time, basically killed the mining equities for almost a decade. I mean, until 2005, nobody wanted to own an exploration mining stock. And so Canarc basically went in the tank too, and we only dusted it off and started infill drilling at New Polaris again in 2007, 2008. And then we appreciated that by the end of 2009, 2010, we didn't have the currency in the stock price to go and actually finance the mine ourselves. So we've looked for a couple of years for a partner. I am of the belief that because of the breakthroughs related to the project and to our neighbor last year, we've now received a number of pretty compelling offers to partner in the project, and that's the next step. That's the next step that allows this company to leap forward. So what do we want to do when we leap forward? Well, we want to do two things. We want to drill our other projects to see if we've got an elephant hiding, a gold elephant, hiding on TLP or Windfall Hills, and we want to take a look at some new opportunities. So let's touch on the TLP, a large gold exploration project in the hot Tintina gold belt of the Yukon. At TLP, we have a right to own up to 100% interest in a very large property measuring 12 miles long and 2.5 miles wide. It's well located south of the town of Ross River, accessible by road, and with an extensive historic exploration database of more than $5 million spent on the property. The geology here is similar to some of the other recent discoveries. For instance, International Tower Hill Mines out of Fairbanks, Alaska is in the very similar geology to TLP. Also the recent Rao discovery and the Ketsa River discovery. We have already multiple targets and historic drilling on the property that have intersected gold. Most of the drilling has been hit and miss. Hit, miss, hit, miss. Hard to build an ore body out of hit and miss drilling. And so we took a step back in 2010. We flew airborne geophysics to try and figure out where some new targets might be that are a better fit to the International Tower Hill model. And what we've discovered out of that work is that there are several significant new opportunities to make discoveries at TLP. So the location is here in the south central Yukon. You can see these major fault zones. This is the one that goes up to Fairbanks. Tower Hill's just up here. And here's the Rao up in this area. Ketsa River is just to the east of us right here. There we go. So when I say there's a belt of gold prospects here 20 kilometers long, this is what I mean. This is actually a 5 kilometer long section shown in the photograph. And if you start looking at the outcropping mineralization that you can literally sample just with boot and hammer, you can see numerous high-grade samples shown here, many of them in the kind of 20-gram range. Some of the historic drilling was also quite compelling. 11 meters of 3 grams, 10 meters of 2 grams, 11 meters of 3 grams, 24 meters of 4 grams. So there's some nice hits in here, they just don't hang together. The purpose of our airborne geophysical survey in 2010 was to take the old map, reinterpret it, and turn it into a new map. And on this map now, we're showing something quite different. We're showing the airborne geophysics. The new VTEM conductors and coincident mag linears are shown in the various blue and red lines. Again, I don't expect you to understand the details. I just wanted to highlight that we've selected a number of new targets where elephants might be hiding at TLP. And that's a program that we intend to drill this summer.
Part of the joint venture or not?
No, this will be something that we do on our own. So just to sum up, attractive gold project, hot Tintina gold belt, extensive exploration database, new targets, road accessible means that Canarc can hit the ground running this summer. You know, clearly in the North Country, it's easier to drill in the summer. We can drill in the winter. It's been drilled in the winter before, but there's a cost to that. So we're waiting for the summer and then we'll go and drill it. In the same vein, we have a project that we actually staked last year in central BC called Windfall Hills. So here we are, central BC. Windfall Hills is located here. If you want the really simple 10-second story, 2.5 years ago, a little Vancouver junior called Richfield Mines made a discovery here called Blackwater. They got the discovery to 2 million ounces and sold on a friendly takeover bid to New Gold at $10 a share. Okay, $250 million takeout. Fabulous. Everybody's a winner. Yahoo! You know what happened in the last year? New Gold took that from 2 million ounces to 8 million ounces, and it's still growing. So you got an 8 million ounce elephant sitting right here. Now let's just take a look at the really broad geological elements in this part of the world. You got to be in the right rocks, so even though I'm not showing it here, the tertiary volcanic rocks that host Blackwater also host our Windfall Hills project. And all of these types of gold silver deposits and tertiary rocks tend to be structurally controlled. It's the faults cutting through the rocks that allow the passage of gold-bearing fluids and the formation of these hydrothermal deposits. Well, now hang on a second. You can see there's a real linearity to a number of the lakes. The linearity takes the form of northwest trending and east-west trending lakes. You see this little arm here? Well, that little arm trends right back through Blackwater. That fault zone is related to the deposit of the Blackwater discovery, and it goes right through the Windfall Hills project. That was part of the rationale for our staking this ground. Now, it wasn't just moose pasture. Somebody had already found a prospect there in the right location, on the same structure, in the same rocks. So all we did was we optioned their prospect, staked all around it, and went in last year and did some additional work. So again, by way of overview, we have the right to own 100% of this thing. It's a large property, 3,800 hectares. That's about 8,500 acres. It's well located, about 40 miles south of Burns Lake, 60 miles from the actual Blackwater discovery. It's road accessible. There's a history of soil and rock geochemistry and IP geophysics. There is 4 very short drill holes that were drilled in an area that now appears to be off target. And what we did last year was we came in, we did some digging to expose the rocks so that we could better understand the nature of the rocks and the alteration in the Windfall Hills system. And we did a systematic soil geochemical survey to extend the target to the northwest. So there's some digging right on the side of a road. The soil here is only 1 meter thick, 3 feet thick. So you just dig down and expose the rocks and you can see the actual mineralization and alteration. Now this is really hard to see, so just bear with me. The history of prospecting in this area was in this chunk of, whoops. Let's go back. This chunk of land down here, and those are the 4 drill holes in the black blobs. What we did was this work up in here. So again, remember the northwest structure? There it is right there. That's the structure that goes down to Blackwater. But there's some northeast structures as well. And these northeast structures show the gold. In the soils and rock sampling, we have a swarm of these structures carrying gold, and they're surrounding 2, we'll call them dome-like structures here. They're actually areas showing up as resistivity highs. In the geophysics that we've done, resistivity highs are important in the Blackwater story because they show rocks that have been flooded with quartz. At Blackwater, the gold is hiding in the quartz. So even though the geophysics can't see the gold, the geochemistry shows the gold, but the geophysics shows the quartz. And so the main target for us is that resistivity high, and all of the faults with the gold surrounding it. That footprint is 1 kilometer long and 1 kilometer wide. And it's about 4 times larger than the footprint of the Blackwater discovery. So we now know we have a large enough footprint for a potential elephant. And even though this is still considered to be an early stage, high risk, high reward prospect, we'd love to drill this summer. So in conclusion on Windfall, we have the right geology. We're in the right geological setting. We're along strike, or along trend, if you will, from the Blackwater discovery. We've identified some high priority drill targets. And the next step, very simply, bite the bullet and drill. So to wrap up on Canarc, our catalyst for growth in 2012, that new stepwise business plan to completely rebrand the company involves A, securing a partner for New Polaris as soon as reasonably possible. We have received a number of serious offers. We've got a couple of people on third base, if you want to use baseball terminology, and it's simply a question of whether we can get one of them home. And we would like to do that as soon as possible. Secondly, as the shares appreciate on the basis of that transaction, then we'll be in a better position maybe to do a small financing. That will allow us to drill the 2 projects, TLP and Windfall Hills. Thirdly, and certainly not least, Gary and I have now for almost 3 years been looking at a number of undervalued and underappreciated gold development and production projects so that Canarc could get into a position to follow the business plan of Endeavour and get into production instead of just staying in exploration. That is our new vision for the company in 2012, is that the stepwise plan culminates in having management's time and money free to do something new, and we would love to do something new this year to speed up the evolution of the company from gold explorer to gold developer to gold producer. Ladies and gentlemen, that's the presentation on Canarc, and I would like to